throughout the weekend. David Russell is joining me now. He's the global head of market strategy for TradeStation.com. Full disclosure, I use TradeStation daily myself. David, it's nice to see you again. Thanks for your time.
Hey, Scott, good to talk to you.
So, the last time you and I talked, which was a few months ago, it seemed like for a while there it was go long and leave it on autopilot. The market didn't seem to believe in dips at all, but the last couple of weeks we've seen a lot of red, and I think we're dangerously close to some sort of correction territory. I'm looking at the futures markets again now, and they're not as dramatically red as they've been at times this week, but they are down again.
Well, that's right. We did just barely hit a correction on the S&P 500. The NASDAQ went into correction territory slightly. So we've definitely had a healthy pullback. We came to the year pricing in a lot of positive news. We were looking for inflation to slow. We were looking for double-digit earnings growth. And then suddenly we got basically a tsunami of uncertainty that we didn't really think was going to manifest this quickly, as much as it has. But now I think we've had a serious pullback, and we take a step back. We also have to realize that look at the inflation data this week. Not that bad. Jobless claims are not showing a major crisis so far in the economy. And what do we have next week? We have a Fed meeting that could be potentially, benign. And we also have a major AI event with NVIDIA. So we could be in a spot here where sentiment takes a little bit of a turn away from this incredible tsunami of fear and uncertainty we've been seeing for the last few weeks.
So markets are always cyclical, and you would expect with the highs that we had for a long time that there would be a little bit of a sell-off and correction and profit taking. But more than that, the market hates uncertainty, as you and I have talked about quite a few times, David. And with the daily changes in tariff threats, that seems to be one of the major concerns. And certainly we had some positive inflation numbers yesterday. In Trump's first month in office. The PPI numbers this morning were out, and there were also perhaps even a little bit more positive than the CPI numbers yesterday. Could that change some of the attitudes and some of the sell-off?
I think for now it does. The problem with the thing about tariffs is that as it goes on, over time, the uncertainty will trickle through, or people fear that it will trickle through into actual business activity. If people have to wait for weeks and then months to know what's happening, it's hard to plan new business, place new orders, start new projects. And that overall can shave percentage points off of GDP, which over time can result in layoffs. That's really the fear right now that people have, but it hasn't clearly happened yet. And I think we're at a spot where we have now priced in significant risk that has not yet really appeared in the data. So there is a possibility of tariffs slowing down the economy and pushing it into, something closer to a recession. But also we've priced in something like that now. And I think people are at a spot where if it doesn't get significantly worse, for the time being, we could be at a spot where it's not going to remain as dominant of an issue. We have that potential here. I think we just have to realize that we are also in a spot of a news vacuum, kind of. And now we're getting back toward, real substantive news next week with the Fed and the NVIDIA event. And then we'll be getting near the end of the quarter, and we'll be kind of starting off a new time. So I think this has been the kind of beginning phases of the Trump presidency. But we have to remember in markets is that, there's always the potential for things to change. And I just think right now we kind of remain focused on that because we've hit a spot of pretty significant negativity that has not yet been confirmed by the data.
So you mentioned the R word, you mentioned recession, which, correct me if I'm wrong on this definition, is 2 months of lower GDP growth. I think that many people in the market are baking in the fact that we'll see at least 1 month. The Trump administration is trying to avoid using that word, but they're certainly not writing off the possibility either.
That's right. It's 2 quarters, but essentially when you look at the situation now, the economy was, there were certain signs of the economy slowing. That I was aware of as we went into this. And I think the expectation was that earnings growth would accelerate and, we would see a period of inflation being stable and then hopefully continuing lower. And that was really the operative kind of model the market had. And then that would result in lower interest rates. And when you really look at what's happened so far, that has not. I'm sorry, I was going to say that has not been invalidated yet. So earnings growth estimates have come down here, but we are in a spot right now where you look at the shelter part of inflation, that remains in effect. So at this point in time, the market can tolerate slower economic growth. The real thing we cannot tolerate is if inflation were to spike back up and interest rates were to move higher. So I think right here we are in a spot where there is some, we had to have, it was the potential for a pullback here, and we definitely had that. And now it's a question of, do we remain in this period of paralysis for several months? And if we do, then a more significant slowdown is something that I think people will, could definitely, play out. But at this point, it's something now where it is the fear has acted out in the market, and now we have to kind of see what comes next.
Tell me about the technical aspects of the trading, because so much is done algorithmically now and is automated. If we hit this slide, is the market just making things worse by hitting certain triggers and continuing the sell-off?
Yeah, I think that's correct. In some ways, we had a complete disappearance of a bid or people wanting to be buying. Everyone wants to wait for the, for some degree of certainty, some degree of, there's that idea of buy the rumor, sell the news. But when it's a bearish move, we're selling the rumor. But then it creates a risk of actually buying the news. Once we actually know that we've reached a spot where the tariff wars have reached a maximum point, or all right, we're not going to get much worse on here, then there's actually creates a potential for people to look the other way on things. So from my view, what's really happened is we've created significant uncertainty. People don't know what to look at. Normally investors are trained to look at things like Fed meetings, economic reports. Now we don't know, is it champagne one day? Is it, is it steel and aluminum another day? We don't know. Is it electricity? I mean, most people never would have thought we'd be talking about things like electricity from Canada as impacting the stock market. So it creates a kind of exhaustion, but the market is always there. So it's not like going to get exhausted. It's just that people essentially don't know how to react to this environment. The playbook is out the window, but it doesn't necessarily mean that it's, a truly some kind of structural bear market. So at this point, what we've seen is we've pulled back 10%. We've gone down to a spot where some technical things like the relative strength index, has hit like an oversold level. And it kind of puts us in a spot where people, like I said, that this risk is now to a certain extent priced in, at least for now. And then we actually turn to the bigger things of something like the Fed. And when you look at where the inflation data here, we could be looking at next week a Fed that more or less kind of keeps us, hopeful of a rate cut in June. And I think that's that could become more of the story as we move into next week.
Well, and I remember the first 4 years of the first Trump administration where technical analysis was kind of out the window and the markets would react to the latest tweet or press conference comment. And I think we're back to some of that these days, and we'll continue to follow what happens there. But again, the markets seem to be rebounding a little bit. The futures are close to a break-even point now, and the market is opening in 15 minutes. David Russell is the global head of market strategy for TradeStation.com. Quickly tell everybody what TradeStation's all about.
Well, TradeStation was really built for people trading futures, people like us who like to trade actively. And now we have a big focus on stocks and options overall. So the thing about TradeStation is it allows you to customize your workspace to do a lot of really interesting analysis and not just analysis, but setting up certain things to allow you to trade in a way that really can work to your advantage. So it's something for people who love to trade, and I think ultimately it's an opportunity for anyone at any point in your life you can jump into trading, and I think TradeStation will be there for people like that, and that's really what we try and do.
David, I've only got about 30 seconds here, but with all of the focus on the Trump tariffs, is there a sector we should be watching? Obviously, the goal is to bring manufacturing of every industry back to the United States, but is there one sector you think that might benefit from this long term?
Oh, long term, I do think if the tariffs remain in effect, it's not necessarily going to be a positive for the economy. If this really does remain something that goes over the longer term, it's hard for me right now to really see anything beyond gold that would necessarily benefit. This would create more of a structural bias for non-U.S. stocks, from what I can tell for the time being. The issue really with tariffs is that it's not really clear what industries are trying to benefit. If you apply them at a level of a country, we import all kinds of stuff from Canada, lumber and steel. These are all different industries. If you want to push an individual industry, that's more the direction I think people would want to see.
David Russell, great to see you. I appreciate your time. This is Mornings with Richard Cross. I'm Scott Sands in SuperTalk, Mississippi.